Global property markets affected. Let's have a look. Hello everyone, Florian.Heise here and welcome to another episode of HeiseSays. I have my stein of coffee and I thought we'd have a look at another article from realestate.com.au, this time discussing the illness pandemic and the effect that it is having on the property markets around the world. Maybe Australia isn't alone in perhaps some opportunities appearing. What do you reckon, everyone? What do you think? Or are they going to say it's time to buy in this market and this market and this market? So, property market update. The illness ripple effect. This is by our good friend Nerida. So, the illness pandemic is having a catastrophic effect on Australia's economy. While it's still too soon to tell what damage has extended to the property market, it will unlikely come out unscathed. In a shock announcement from Victoria's Consumer Affairs late on Thursday evening, private inspections of properties that still have people living in them have been banned. There you go. I mean, you can't imagine that isn't going to have an impact on property. We're looking at other pieces where student accommodation is starting to flood the market, Airbnb properties being flipped for long-term rentals. Then people are being, first home buyers are being encouraged to get out there and buy, but also vendors are pulling stock off. They don't want people inspecting. They don't want strangers coming through their houses. People are scared and worried. And then just looking at the unemployment figures, the predictions, fortunately, because of the JobKeeper program, we're not going to hit 17% unemployment. So these extreme measures are now out of step with the rest of Australia, including the directive from Prime Minister Scott Morrison, which allowed agents to continue booking private inspections with prospective buyers and tenants. It is likely this ban will have a profound impact on Victoria's economy, real estate industry, and the general community, as most Australians are unlikely to buy or rent properties sight unseen. And she raises a very good point here. Victoria is essentially doing their own thing. In many ways, it seems to be the most eager to adopt these police state restrictions. Is it just me, or are we hearing more and more stories coming out of Victoria? It's funny how they're so eager to police people playing computer games or going to the beach, yet when people get attacked in their own street from gangs of hooligans or robberies happen in shops and petrol stations, it doesn't seem to be a priority. There's no issue. Victoria's a funny place, isn't it? Must be the weather. Has to be the weather. So, as the industry awaits further clarification on the changes, REIV President Leah Callan says the real estate industry contributes close to 50% of the state's income via means including stamp duty and land tax. Just think about that. Let's just highlight that again. 50% of the state's income via stamp duty and land tax. And remember, these are all, stamp duty is a tax. Land tax is a tax. It's just another tax. It's another tax. So there is a perverse incentive for the state to be pushing the property prices up to get more people into property. Is that a good thing? Is that a bad thing? So, to be advised at 5 p.m. the day before Good Friday that agents can no longer conduct inspections on occupied properties is disgraceful. Well, you're just tax cattle to the glorious leaders in the Victorian Parliament. There you go. I mean, surely you could manage it. People could wear a mask. You could keep social distance when you walk through there. You could check the temperature of someone before they go into the property. Surely this could be risk managed. Surely it could. Don't you think? So online auctions make up a third of previous auction markets. So really, I mean, this is a beautiful example of putting a positive spin on something. Auctions drop by 2/3. The number of scheduled online auctions are far fewer than what we'd normally see scheduled on realestate.com.au for on-site auctions. The industry is still transitioning to new ways of selling amid the illness. So we might see a bigger uptake of online auctions as it becomes the new norm. It's important to remember that only 14% of properties go to auctions. So auctions really are only a small portion of the market. Last week, online auctions made up 5.8% of the overall market. Then why? Why is the media always, and Domain, realestate.com, why are they all just screaming about auction clearance rates being so important? How we're hearing all the time. Even the boys at Fresh Canvas send us information, and you can find it on my website where I've actually written an article showing you that the auction clearance rates are underreported and are incorrect. What they're telling us. And now we don't need to worry about it because it's only 14% of all properties go to auctions, and yet every other day we're hearing that it's so important in the news. So we're kind of getting mixed messages here, Nerida. Come on. We're getting mixed messages. You can't blame us all for being skeptical, grumpy bastards. So while clearance rates are used as the main form of auction data pre-illness, clearance rates are really only a good indicator of the performance in premium Sydney and Melbourne suburbs, where the majority of auctions take place. Well, yes, of course. That's the centre of the world in Australia, Sydney and Melbourne. Right now, the clearance rate is a redundant indicator, partly because so few properties are now going to auction, but also because we're still in a transition phase and learning how best to sell property via auction in a fundamentally different way. Well, I'd say maybe it's an opportunity to actually address some of the issues in the way that they're reporting their data. Remember, real estate agents are going to underreport failure. That's just to do with their personality. It's to do with everyone's personality. As with all disruptions, it takes time for new behaviors to replace old behaviors. At this stage, it's too early to tell what the eventual uptake of online buying and selling will be post-illness. I do think on-site auctions will come back, but no doubt the industry has evolved. So how the illness is affecting property around the world. It is still too early to know what will happen to pricing in Australia as a result, and we likely won't be able to analyse data in a meaningful way until May. Until then, we can look at the worst case health scenarios playing out in northern Italy, New York, the UK and China to understand what is happening to property in severe lockdowns. Markets around the world that went into the illness strong are faring better, and Australia's property market was well into recovery in the first quarter of 2020, which is a positive sign. Really? I thought we were having inconsistent growth. You need to look at it at a granular level, but sure, we'll say, it was going well into recovery. What do you think, everyone? She seems to have changed her tune, hasn't she? It's also important to note that Australia is currently in a very different situation with much lower rates of death and infection and a far less severe lockdown. Doesn't feel like it, does it? Although recent changes to inspections in Victoria will immediately and significantly impact the local economy, property industry and general community. So let's look at New York. The New York property market started the year particularly strong. In the first quarter of 2020, the number of sales were up 13.5% compared to the same time last year, although the median sale price was down 1.2%. The shutdown in New York came relatively late, and high levels of activity continued until around mid-March. New York now has strict lockdown in place, which means that real estate agents can't work and it is not possible to do an in-person showing of a property. Last week, only 2 properties sold at the luxury end of the market in New York, 4 million plus, dropping to the lowest level since the GFC. Well, there you go. Northern Italy. The property market in Northern Italy was also set for a solid first quarter. On the 22nd of February, parts of Lombardy were shut down. By 8th of May, it was extended to all of Northern Italy. Like New York, there is still very little data out there as to what the impact has been. In Milan, home sales dropped 12% for the first 2 months of the year compared with the same time last year. However, given the full impact of the shutdown wouldn't have happened in this time period, it may also be driven by a general slowdown of the market. For March, there is very little data, although Italian real estate research house Scenari Immobiliari claims there's been no impact on pricing, and rents in Milan have actually risen. The United Kingdom. In the UK, a recommendation on the 22nd of March ordered that people do not move house. Available data on what is happening has been easier to come by, and the number of new homes listed are only down 1% despite the restrictions. There have been no mass withdrawals of homes, but transactions are far fewer and are now down 70%, although it is surprising there are any given the severity of the restrictions. Well, yes. China. There's been a lot of data coming out of the impact of the illness in China, where the country was in virtual lockdown from the end of January. New housing starts fell 45% due to quarantined construction workers over January and February, while the property market investment fell 16.3%. House sales fell 40%, but surprisingly, property values rose 5.8% in February, only slightly down from January at 6.3%. So there we have it, everyone. Some insight into the property market around the world and how Australia might fare. I think it's still very early days to see what's been happening in other countries. But, are these other nations, are they as heavily invested in property as Australia is? We definitely have a lot of debt. We definitely have a huge property bubble. And we'll have to see if they can keep the can kicking down the road. Once again, let me know your thoughts and opinions in the comments below. Thank you everyone for watching. Please like, share and subscribe to the channel. If you're a fan and you want to support the channel, there are a few ways you can. You can join the channel on YouTube or on Patreon for a small monthly fee. You can use our affiliate links at Amazon or eBay for your consumer purchases, or Independent Reserve and Kucoin for your crypto trading. We have merch from Teespring or HeiseSays. We also have the ability for you to send us gold via Gold Pass from the Perth Mint and PayPal to support us that way. Thanks everyone. Have a great day, and I will see you in the next video. Bye for now.